If you invested in Tesla, you're betting on one thing: future growth. If you invested in TSLA, TSLY, you're betting on income right now. But here's the part most investors miss. These are not two different ways to invest in the same asset. Tesla is a growth stock. TSLA is an options-based income strategy that happens to use Tesla. One is designed to compound capital. The other is designed to pay you even if the stock goes nowhere. Today we're breaking down how these strategies actually work, what you're giving up in each case, and which type of investor each one is really for. Because chasing yield or growth without understanding the trade-offs is how portfolios quietly fail. And by the end of this video, you'll know exactly why Tesla and TSLA should never be judged by the same rules. So stay tuned. Welcome back to Simply Money. Today we're comparing Tesla with TSLA. We're going to be doing our normal chart. For those who have seen our channel before, we have a playlist with these comparisons, the facing off of underlying funds with their covered call funds. So we're looking at growth versus income and seeing how they perform in different areas from the inception of the newest fund until the present. And so we're going to start out with Tesla right here. We have January 12th, 2023, with a starting share price of $123.56. We're using a $50,000 hypothetical fund for both of these, so they're both starting out with $50,000. With that being the case, Tesla, you're able to get 404 shares. And here in column D, we'll be showing the dividend amount. There is no dividend for Tesla, so obviously those are zeros. And there's no new shares being added over here in these columns. So we have our total shares, and that will stay the same on Tesla because you're not adding anything to it. And here in column H, you have your Tesla balance. We'll go down here. Looking at this, you can see it started at 123. It went up pretty quickly, got up to 290. Then it slipped back down here to, 172 in May of 2024. Then it started bouncing back up, and then in the end of 24 and into 2025, it began really taking off again. Had a couple bounce downs, so you can see this is a very volatile fund. Tesla is a very volatile stock, and you're seeing that play out here as it goes up and down, but we're ending here at the end of the week of January 16th, 2026, at $437.50. So in that time frame of 3 years, you're looking at 271% growth. Not too shabby. Tesla's really, at this point, done well. It had some points where it was really down, and it will probably have some areas down in the future where it's down again. This is a single stock. You get everything focused on there, and that is the outcome that you have. Again, you have 404 shares. You're up to $177,000 balance. You've gained $135,000 in 3 years. That's a pretty significant gain, going from $50,000 to $177,000. You can see it had peaked up here, was at about $194,000. I think was the high that it ever got in this time frame, but it has done very well. So if you have held this since this time frame, that's buying in at a pretty low price there at the time frame, but it has done well, and it has really produced some good returns for those that hold it. That brings us over to TSLY, and this is covered calls on Tesla. And so you can see here the share price on the same January 12th, 2023 is $141. That was able to get us 353 shares. This is the amount per share dividend, $9.98 that it paid. The dividend amount would be $3,533 that you got. This was paying monthly, and it turns into a weekly pay down a little further, and we'll see that. You can see a very healthy distribution, and collecting $3,000 a month, $3,500 a month, you're able to add 25 more shares. And we're going to look at what it's like not to drip and to withdraw money from these funds. So we'll compare that in a minute. But right now, looking at adding TSLA and getting these dividends. As we go down this column, you can see that it fluctuates again. You have $9.98. Here in May, you have $4.40, and we get up to $10.60. And then when you get to February of 2024, you're back down to $4, get as low as $3 here in June of 2024. Then it begins going up a little bit, but then again, it goes down and keeps going down. And you can see that's because the share price, look at the share price over here. We started at 141 and it has just gone down and keeps going down and not recovering at all. It has dropped now to $36.06, a negative 54% on the share price. You can see the dividend has gone down significantly as well. Now you're looking at 60 cents, 38 cents, 31 cents, 34 cents over and over. But you are also seeing the dividend go down. A lot of times you might see this dividend amount go down per share, but the dividend itself, the payment goes up because you're gaining so many shares. And it did at first. We had a nice increase here where we got up to $7,700 in December. But if you notice, part of what's causing that is right here in October 3rd, 2025 is when they started going to their weekly payments. And so the first one was October 17th. That's where you see that go from $4 down to 96 cents to 82 cents because you're getting that each week. It is deceiving when you see that big drop of $2,000. But if you add these up, you're looking at $8,000 right here, give or take, for the month, but it has increased from the beginning. It went down some, but then it started rebounding. And even with this lower amount that you're seeing here, you got $900 right here, but you're getting all these new shares. In this time frame of 3 years, you've gained 2,426 shares. So you're getting this payment, but you're seeing this decrease. We have to look at that and see, is it worth getting the income and reinvesting it or reinvesting part of it if we're going to take the income? With that, you can look over here and you can see your balance is 105, we'll just say $106,000. So a gain of $55,000, which is obviously much lower than what Tesla did. Here in column P, you have the difference. And when it's a positive number, that means that Tesla is ahead. And it has been positive from the outset, other than the first month, because you got that dividend. Other than that, it has been Tesla all the way. The closest it got, it looks like right here, the first year in May, it was only up by 9,500. But as we go down, it came down, got close here for a little bit, but then it just took off. And you can see that Tesla is up $76,000 more. So if you had put $50,000 in each of these funds, your Tesla would be up $76,000 more than your TSLY. Now that's with just reinvesting and letting dividends grow and just building up your share quantity. That's what happens and what a lot of people are doing. But you also have those that need it for the income. Now they may not do 100% withdrawal, that they take all of the income. They may only do part of it. And we do some of our scenarios, if you've watched those, are hypothetical, where we do 100%, 50%, and zero drip and compare how those work. And if you'd like to see that on either of these funds, well, on TSLY, let me know and we will do that for you. We'll add that to our list of videos to make. But what we're going to look at over here is we're going to simulate that we're living on it and we need the income. If we put $50,000 in Tesla, we have to sell shares in order to get money. So what we do is whatever the dividend amount is for TSLY, we sell that amount of shares to get that same income. And so you'll see the withdrawal here, the number of shares that we have, and you can see how those decrease as we're selling shares. And you'll see your Tesla balance right here in column R, and we'll go over all this in a minute. And then TSLY's dividend, we don't have to sell any shares, so our share quantity stays the same. And that's that 378 that we bought at the beginning. And we'll see what our balance is as the share price is dropping, but we're taking the income, so we're losing value. And that's definitely a scenario where TSLY we would want to reinvest some of the income to make sure that we're not depleting our account completely, unless you're using it to fund some other position that you want to hold. And that's fine. A lot of people do that as well. What are your comments on this so far? Do you like Tesla? Do you like TSLY? Do you see the benefit of either one of those? Let me know down in the comments below. Looking at the Tesla with the withdrawal, again, here's TSLY. We have a $3,533 dividend or distribution. So we have to sell the number of shares to get that income. You can see that we went from the 404 shares down to 376. Then we have a $3,194 distribution. So we have to sell shares. Now we're down to 360 shares. As we come down, I want you to pay attention that the shares that you hold of Tesla are dropping to where we end at this end of this 3-year period at 139 shares. We're down 263 shares, but your balance is still up $14,676. So even though you're taking that income, which has totaled $61,000, you've also increased because the share price has gone up so much. Now with Tesla, you're taking this distribution and you can see that it's going to get smaller and smaller. And then as we get down here where it turns to weekly, we have to keep an eye on that. So here in October of 2025, we're down here getting $300, $200, $170 per week. It is dropping drastically. The last monthly payment was $1,400. Before that, you had $700 a month, where we started out at $3,500. If you're trying to live on this, and in 3 years you go from $3,500 a month down to $700 a month, you're going to be hurting. And not only that, fine, you've taken out in 3 years $61,000, but your portfolio balance is down to $12,000. You have dropped $36,000. And so Tesla is up $50,000 in this time frame if you're taking the income. Now, again, you could do this in different ways. You could say maybe we'll take 50% and we'd only have to subtract half of whatever the distribution is. Tesla's still going to be ahead. It's ahead any direction you do it. But that is the data that we have on these two funds for the same time frame. You can see that Tesla, the underlying, you would have been way better just to buy the shares and to sell them periodically as needed, even in these downturns, even when there's a pullback and the share value is down and you're having to sell at a discount, which is the worst thing to do, but you have to do it. You're still better off than if you own TSLY and you're just taking that income and you end up with, in 3 years, you're down to $12,000. And you're getting $100 a week. Maybe you get $400 or $500 a month. Where Tesla, you're still only getting $400 or $500 a month because you're only selling that. We're keeping it even Stevens here. Now, obviously, you couldn't sustain taking $3,500 a month out of Tesla. It would have been way down if we had done that, but you would have taken a lot more distribution than the $61,000. So there's a lot of ways you can look at it. I do these just to give you a quick overview, high level. This isn't an exhaustive analysis of these two funds by any means. It's just to give you a visual of these data points. This is not financial advice. This is for information and educational purposes only. Please do your own due diligence. Know what you're getting into when you're investing. And we are providing this just to give you the information for you to dig deeper yourself. We're not telling you to buy either of these or not to buy either of them. We're just sharing with you what the data says. That is it for this video. Please don't forget to hit that like and subscribe button if you found this informative. Tell me what you think about these two funds and other funds that you want to see. If you want to see growth funds versus income funds, share that in the comments. Or if there's funds you want me to do, income funds, covered calls, high yielding funds, you want me to do the all-in scenarios with the drip, no drip, and see how those play out as well. Leave that in the comment. Your comments are what drive us to produce these videos. Your suggestions are why we do the ones we do. I appreciate you joining me, and we'll see you next time on Simply Money.